Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, wrapping up this round of weekend videos with the USMJ sector. Certainly a lot of weakness in the S&P 500 and broader markets on Friday with escalation of the trade war. I go over that in the broader market video. And if you are trading any sector in this market, you need to be aware of what is going on in the broader market because those implications have ripple effects everywhere, including the MJ space. So, highly suggest being tapped into what's going on there, even if it gives you a headache. So looking at GWPH, we have weakness, and we have weakness in the entirety of the sector. Let's speak about the sector as a whole at this point. Again, weakness in the overall market is only going to add weakness in this sector as well. We can't have much bullish confidence in this high-risk, high-reward sector if there is not much confidence in the S&P 500. So that's something that we're going to have to keep an eye on. If we break the August lows in the S&P 500, things can get ugly over there. If things get ugly over there, that can prolong the weakness in this sector. So looking at GWPH, we closed weak. We closed at one of the weakest prices, the lowest price that we have seen in many months. So looking at it on a longer term time frame, the weekly chart 150-132 has broken. So we are now in a weekly downtrend of lower highs and lower lows, and the next support level is down at 140.44. The biotech sector as a whole is one of the weaker sectors in the market, and GWPH is subject to correlations with the biotech sector. So looking at XBI, which is the biotech sector, which I do in the market video, we have broken key weekly support, and we've broken bearish from a 10-11 month equilibrium that we've been watching. So that's not a good sign for GWPH, and we can zoom out to the monthly time frame and see that the monthly short-term support has been broken as well. So I was interested in getting a GWPH position when consolidation looked contained and healthy, and that was back here in July. And that's why stop losses are so important, because if I had entered a position and did not have a stop loss, right now I'd be down about 20%, which would obviously be a pretty bad position to be in, which is why stop losses are so important, because if something doesn't go according to plan, you don't want to be in that position. So anything on the daily time frame for GWPH, even when we bounce, anything under 157 is just a lower high at this point, keeping those bears in control. IIPR is also weak. We have to be cautious of a change in trend on the weekly time frame for the first time in many months. So we're looking at the all-time high, the low of the pullback. Lower high has been set at 115.82, and if we see a bear break of the low of consolidation of 97.28, that's a clear weekly lower high and lower low, and that is going to shift momentum notably. So looking on the daily time frame, we did get our little bull break. It did not last long. This is why looking at the longer term perspective and having a general bigger picture of the scaffolding of your trades is so important. Because when you see this daily bull break, if you're only looking at the daily chart, you might be saying, man, we might be making it back to all-time highs. I'm going to ride this out. But if you look at the weekly time frame and you've looked at thousands of charts and you've seen them play out through experience, you know that the most likely scenario is a weekly lower high to be set. So that helps keep us contained as far as what our bullish expectations are. We can say, yeah, we broke bullish daily, and maybe I want to initiate a position there, but we know a weekly lower high is the most likely scenario, and that keeps you cautious. So if you made a bull break, an entry on the bull break, even if it was the last level of 110.52, let's say you got in at 110.60, and then we got some follow through up to 115.82, you made a solid 4.5%, or you were up 4.5%. That's enough space. Put your stop at break even, and that way you're protected. If you say, okay, we're expecting a weekly lower high, and if that gets set and we head back down towards where we came from, I'm not going to want to be in a position. And hopefully that protects from, ideally, bag holding, or I should say not ideally, bag holding if we do see a lower high and lower low. So it's all about 97.28. If that level breaks, the next weekly support is 81.23. And we're finally seeing IIPR, which has been the lead MJ bull for all of 2019, essentially, with so much weakness elsewhere, finally seeing that come down to earth a little bit and have to be cautious of the shift in momentum. Cura, bear break on Friday, not a lot of follow through, but breaking 839, we have given back the entirety of the bull reaction to the deal that Curaleaf had, and I forget the other name of the company off the top of my head, but that big old private company that they're going to be buying out. And we're now looking back down at 802. So no daily trend change. Again, this just lumps together with what Canadian MJ has been doing for 4 months. Solid bull moves, absolutely, but no higher low and higher high follow through since the all-time high. Every single move since the all-time high has been a lower high. Sometimes we have a higher low, but we've never seen a higher low and higher high. And that is what is keeping the bears in control. So the weekly time frame is close to dropping to another leg down. If 802 breaks, it's obviously a red flag for the bulls. It'll just be a weekly lower high at 1103. If 803 or 802 breaks, the next level we're looking down at 730. If the bulls can hold 802, we'll look for a tightening weekly range into the fall, but the bulls better show up this week and try and defend that support level. IAN, a little bit of bearish action Friday as well. Bulls tried to buy some of that dip. We're just saying in this tightening 4-hour range, we have earnings, I believe Tuesday. So probably just going to stay in this 4-hour range until we get an earnings reaction. And we are just looking at this as an equilibrium. Low of 312, high of the bounce was 350, higher low at 318, lower high at 343, and now a higher low at 320. So 320 to 343 is the most important range to be watching. And pretty much the earnings reaction is going to dictate whether we drop down to the lowest consolidation price of 2019 or whether the bulls can make their way up. And again, if we do, we'll just be looking for a lower high because anything under 395 is a lower high. And we could see a 18% bullish reaction to earnings and still be in a daily lower high pattern. So bears are comfortable in that regard in the sense that even with a very solid 10, 15% bullish reaction to earnings, we'll still be in a daily downtrend. But it's earnings that's going to dictate short-term direction. And for the sector as a whole, we can be distinguishing names that are hitting their lowest prices of consolidation and names that are not. That's a good distinction to make between who is holding on to at least a support level and who does not have any support from 2019 nearby. IAN, if we break 312, would go in the latter category of not having support. Curaleaf, if we break 802, would go in that category. TRUL is in that category down near the lows as well. There's not many names that are not, but it is an important distinction to make. So for TRUL, we knew that oversold bounce was just going to give us a lower high. So again, the same thing I talked about with IIPR, the broader, longer term patterns dictating how we trade the shorter term breaks. If I'm only looking at the hourly chart and I say, oh, that's a bull break, that's a shift in momentum, now the bulls are going to show up, I have to zoom out and know the most likely scenario is just a daily lower high. So we can't anticipate a whole lot of follow through on an hourly trend change if we know the daily lower high is the most likely scenario. Double top at 1145 and now pulling back and losing hourly support levels. So daily time frame, if we're going to see a shift in momentum, bulls must hold 1023 and break 1145 to shift the daily momentum. If we break 1023, we're looking down at 10 psychological and then 910, the all-time low. The all-time low is in sight here for TRUL. Obviously, that would be worst case scenario for the bulls if that were to happen. But the bulls are proving nothing to us. MedMen still in a tightening range. Bulls ideally want to hold on to 265 to stay within striking distance of breaking resistance. If we break 265, I'm going to view it as an equilibrium, which it already is with our low, high, higher low, lower high. And if we break 265, we'll look to pull back and form a higher low compared to 241. Bulls can stay in favor of this pattern if we hold 265 and break short-term resistance of 284, but we closed weak on Friday down at the low of the day. So bulls have been unable to confirm a daily trend change, which is keeping the bears in control of the trend at this point. So 265 and then 241, the most important supports, 284 and 294, the most important resistances. CWeb. So CWeb on the daily chart is testing the low of consolidation, 2308. If that breaks, then we have not set a weekly high or low yet, and the bulls will be giving back a lot more than they would have hoped. And again, the monthly equilibrium is standing out pretty clearly at this point, and if 2308 breaks, then the odds of a monthly equilibrium increase a good bit. High, low, big upper wick looks like our lower high is set, and we'll have to look for a monthly higher low compared to 1465. And again, not surprising to see an equilibrium result from all this volatility. From the all-time high all the way down to where we dropped on our low of consolidation, that's a 55% drop. So seeing all that volatility usually is when we see equilibriums emerge from that volatility. So 2308 key support, short-term resistance 2580. Bulls have to hold 23 and break 2580 to have hopes of setting that weekly higher low and shifting momentum back in their favor. But bears have momentum in their favor currently. Burden of proof is on the bulls. OH weakness, so bearish reaction to CL earnings, not getting any kind of bullish follow through, and OH is heading down towards its lows of consolidation. So we got 684 support and then down to 640. The bulls would have to hold 640 and break 801 to shift the weekly momentum, but it's entirely possible that this weekly bounce is just setting a lower high and further downside could occur, especially if weakness occurs in the S&P 500. If there's one thing that can make this sector pull back further and can dampen any hopes of a September rally, it's significant weakness in the S&P 500, which is a possibility. So again, we have to always remind ourselves, it can always go lower. If you're always keeping that in the back of your head, you know, the people get in trouble when they say it can't go lower and it's cheap. I really dislike that phrase, this stock is cheap. I understand if you're looking from a fundamental perspective and valuations and all that, that you can view something as cheap, but the market will never view something as cheap just in terms of we can't go lower, it's already so beat up and it's so cheap. There's so many examples where emotion can lead to things getting to very extreme levels, and if we have a lot of fear in the S&P 500, we can absolutely see these US stocks in the MJ space, we can absolutely see them all hit lows of 2019 if that weakness in the S&P 500 continues. So CL heading down to its low, support is 10 psychological and then 940. The bulls would have to hold 940 and break 10 or make that 1249 in order to shift any momentum. But just, I mean, we have so many examples from June. It's big bounces, faded it all back. Big bounce here in August and giving it all back. So another lower low is entirely possible. It's all about 940 support. GTII is one of those names that is at its lows and continuing to fade back down. If 1008 breaks, it's a monthly downtrend. Right now, IAN is one of the only names that has broken its key monthly support in the USMJ space, but it would be all-time high, monthly higher low, lower high. Bulls must hold 1008. Otherwise, we're in a monthly downtrend and looking at the all-time low. GTII is standing out for its significant weakness, and there's no nearby support aside from 1008. HARV is down at its lows. Looking at HARV on the weekly time frame, we are looking back towards that all-time low of 456. So again, monthly perspective, long-term, giving it all back, and bulls have to hold 456. There's still a lot of space before we get to that level. That's another 25% drop. If we were to drop down towards that all-time low, I may be interested in a play off of that support level, but that's still a long way away. I personally haven't had any interest in HARV and GTII, having nothing to do with fundamentals and everything to do with the charts. They have just clearly been some of the weaker USMJ names with even really no real weekly bounces getting any kind of momentum. So I haven't really been paying much attention to them, honestly. And it's just that key level. Let's see, we got one more level, 657. That already broke. So we are just looking down at psychological 6, 5, and then 456. KSHB, bounce was just a daily lower high at 445. Bulls are trying to build a base at 375 because 375 and 360 are the only support levels nearby. Short-term resistance, 4 psychological, and then 445. Bulls would have to hold support of 360 and break $4 to even begin to shift or try and shift momentum. But again, bears have a lot of control. CVSI. So CVSI on the daily time frame had that bullish news. We're consolidating. Anything on the daily above 306 is a daily high or low. Keeping in mind that the weekly chart is still very clearly in a downtrend, rejecting just under exponential resistance, which has been resistance for many months. Bulls are going to have to form a higher low, change the hourly trend back in favor of the bulls, and then try and see continuation over 389. But we are just looking for anything under 435 to be a weekly lower high. Downtrend still very clear. NBEV still in a clear daily downtrend. Anything under 369, just a lower high. We topped out at 358. 320 is the only support. Bulls have to hold 320, only nearby support. Bulls have to hold 320 and break 358 to change the daily trend, which they have been unable to do for months. And looking at that level, if it breaks, 303 is the must hold. And I might have interest in that level if we were to head down to it. because we are still in a monthly equilibrium if 303 does hold, and that's still another 10% to the downside. And you can see the RSI levels on a lot of these names, they get cooled off. We're not seeing oversold conditions on a name that's been in a downtrend for month upon month. And it's because of these little bounces just cooling off the RSI to allow for a downtrend to continue without getting to extreme levels. PYX, little bit of green, so we did break some resistance. Certainly can't say that about many other names. Daily consolidation is underway. Anything above 1291 is a daily higher low. Weekly time frame, most important resistance for me is 1635, and we topped out at 16. So it is still a lower high on the weekly. Bulls need to keep the daily uptrend and break 1635 in order to try and shift some momentum meaningfully. And let's look at it on the monthly time frame. Equilibrium, high, low, lower high, and forming a higher low compared to 1130. Let's see what the Bulls can do as far as we'd have to change the weekly trend if we're going to be confident that this monthly higher low has been established. And then we would look for a monthly lower high compared to 3269. ZYNE, pulling back on the daily. Bulls must hold 1045 support. We did change the daily trend, but if we zoom out, anything under 1570 was just a weekly lower high. So Bulls still have a lot of work to do. They need to hold 1045 and break 1251. CXXI, extremely weak. Penny stock, again, penny stock in a weak sector that's already really high risk, high reward. If the leaders in the sector are high risk, high reward, being a penny stock in that sector when emotions shift from euphoria is just, brutal. As you can see, the size of the pullback from the high. Anything under 95, really 87 and 95 are key resistances. 76 and 72 are the only support levels nearby. And the bears still have complete control. Tilt is the same thing. It's still in a tightening daily range. Bulls must hold 72 and break 88. And right now we're in the middle of that range, but with the week close on Friday, heading down towards that level. Worth keeping an eye on it for the next few days to try and hold 72. I personally wouldn't have any interest unless it got that bull break, but same thing. Penny stock, just showing this chart is just perfect cycles of euphoria, despair. So, bigger picture, whole sector. Short-term catalyst that could cause a big spike is brutally needed to get a bit of a short squeeze, but that would have to be big picture in terms of Trump saying something about marijuana or in terms of, seeing the SAFE Act pass Congress. I think a lot of that's probably priced in for the SAFE Act or the States Act passing Congress because it's a Democrat-controlled Congress. I think the hurdle is going to be the Senate. If it were to pass the Senate, then we would start to see the market get a little bit surprised and price in bullish action. But the Congress is currently in recess, and I got to check the date when they get back here, but we don't have any short-term catalysts, and with market weakness, we have to anticipate that it could get worse. So I personally am vast majority cash and patiently waiting. And I know there's other people that have already started scaling in. If you have already started scaling in and you're looking longer term, that's certainly a different strategy. I'm being a bit more cautious in that regard. And I would personally rather be chasing a little bit into bull momentum on a shift than trying to catch some falling knives. But it all depends on what your game plan is. And I definitely still plan on putting a lot of capital to work in this sector. I am just biding my time a bit more. So I do still have some small positions in OH and IAN. OH is certainly on the chopping block if we are going to drop down to lower lows. I think I'm still in the green there, so I will cut that if we head back down to my break-even price. And other than that, patiently waiting and watching, and we'll see how things develop. Keep your eye on the S&P 500. Try not to look at your account. If you are looking longer term, don't check your account every day. That's just going to add stress and be a psychological burden. If your timeline is truly 1 to 2 years plus, there's no reason to check every day. There is a reason to check every week just to keep an eye on things, see what's up with news. But again, psychological health is important, and this is brutal. And we saw it in the crypto space. Again, you look at Bitcoin, there's so many similarities between the crypto and US space just because of the cycles, the emotional cycles where you have huge, immense euphoria, and then it just fades all away. And obviously this is a more extreme version where we went from 20,000 and the pullback was down to 3,000. So we essentially gave back, 70% or so. And the momentum did shift out of nowhere, but it was brutal. And now we're seeing the exact same thing in the MJ space. Cycles, emotional cycles. Charts. Have a good weekend. We'll check in on Monday. See you then. Do good things.